Hey everyone, it is Tuesday and I got the axe out. All right, I was just looking for something dramatic for the thumbnail, and then I found this thing that actually I use to chop branches of trees and things like that in my yard. Um, Pretty awesome, like mini axe, but and despite anybody thinking that we're gonna axe any of the stocks that I mentioned in my description. Well, no, that's not what we're going to do. Um, Today, I want to talk Tesla because I'm starting to get questions from folks on X, previously Twitter, and other places. Paul, when will Tesla join the party? When will it start to do anything? So, I'm going to go a little bit into that. And I actually did a little bit on the silver tier model update. I talked about Tesla, and I'll do some of that again. But before I go into any of that, and of course, Bitcoin, and crypto, a lot going on there. So want to update folks on that. But before I do that, all the usual things that I usually do, which is to tell you that this live stream, the content from ATG Digital Media, is not investment or financial advice. It's presented as opinion, information, engagement, and entertainment. So whatever you choose to do with it is your money and is your responsibility. All ATG digital content may contain errors, oversights, and mistakes. Understand that investment operations, what are those? Buying, selling stock, crypto, doing anything in the investment markets, have significant risks and can lead to the loss of your principal. What's principal? Your money. The owners, employees, contractors, own, trade, transact, and securities I mentioned in this video, and all of the content from ATG Digital Media. Quick plug for all of the free stuff that we put out. My Substack, highly recommend you go check that out. Ballman Speculating Podcast did a new podcast for the first time in about a month yesterday, so go check that out. And hey, I'm on YouTube right now doing this live stream. Social media, very active on X, previously Twitter, Instagram, here and there. Facebook, Dean is on Facebook in my name all the time. So very active discussion going then on anything that's sort of like hot and going on. And quick plug for my company subscriptions, which begin at $9.99 at atgdigital.media. All right. Tesla. I mean, what is going on? Today, Tesla stock, what was that? About 180 again for the second time. Let me just put this up. Yeah, that. Yeah. You can see. So this is a 5-year chart of Tesla. And I want to, talk a little bit about why stocks like Tesla, which have extraordinary amount of things going on, can sit and quote unquote languish while other stocks go up. And it really has to do with this. You see this rise from what? That's like June of 2019. Of course, there's the COVID crash. And then here's this enormous move that goes to all the way to $414. And in particular, I just want to point this out, right? So this is where, like, when you see chart patterns like this, or when I see chart patterns like this, where like you see like this big, huge moves, make everybody very happy in the short term. But generally, when you see like this, like, just like, this is a candlestick chart, when you see like this, like these big moves up day after day, week after week, everyone is very happy. We're euphoric and we think like 1,000. The thing is that that's like the last of like the demand just being sucked out by market makers, pushing people to buy at very high prices. And then the demand kind of gets sucked out. And so people think that stock prices are set by news. People think that stock prices are set by some committee. People think that stock prices are some perfect calculation where there's Investors are sitting there with a calculator and like working out, okay, this is the value of the stock. This is the price I will pay. Sadly, that's not true. The reality is this, which is that the stock market is driven by demand and supply. And if there are a lot of people that want to pay high prices, market makers, intermediaries, investment banks, um, um, can sell you at whatever you want, at whatever price that you are willing to pay. And that is the nature of the market. So when everybody comes in at the same time because of past performance and wants to buy into something, then hey, you can get very, very, very high prices. And that demand, once it's sucked in, well, then there's nobody left that wants to come and pay an even higher price. And so even when you have a stock like Tesla that has so much going on within the company, and what are all the things going on? Well, there's the production of the Cybertruck, there's full self-driving, there's the Tesla Semi, there's the Optimus robot, there is the Powerwall and the solar business, and there's the $25,000 car. Still, because the fact that you had that huge run that starts at about 11, ends at about 414, and including like that last section, right, that I pointed to, which was from 180 to $414. Yeah, when you have that size move happen so fast, well, that's essentially a lot of fast money, easy money that is looking to essentially get in as fast as possible and looking to make as much money as possible. And that money has to get washed out. And sometimes that washout can happen very rapidly. And when you see that happen, you'll see a big gap down. In other words, someone comes and essentially resets the table. They are like, okay, I got too much Tesla, I got too much whatever stock, and I want out. Remember, in stock markets, if you have a very large order, let's say you have 200 million shares that you want to sell. I mean, we all think that, the stock market is like us, and we've got whatever, 100 shares, 1,000 shares, 10,000 shares, 100, maybe 100,000 shares. But they're, the big institutions out there, they trade in hundreds of millions of shares. How does that work? I mean, well, they call up an institutional desk, and they'll say, well, I want out. I want out. And they will quote them a price. They will quote them a price and say, well, we'll take all 300 million. And let's say the current price of the stock is 50. They're like, we'll give you 33. That's our haircut, for taking it all. You want the liquidity. That's the price. Now, in a stock like Tesla, where there's a lot of individual investors that want to keep holding, this is happening drip by drip by drip. I mean, in other words, all the people that came in for fast money, easy money, quick money, they're just like, rolling out a little bit at a time, because many of them, yeah, I mean, they're probably just giving up in impatience. It's not that they don't understand that, like, hey, well, this is Elon's company. It's, I mean, at one point, obviously, everybody was incredibly optimistic about it, and thinking that, okay, once the Cybertruck, start to be produced, the stock would soar higher, and it hasn't delivered on all of those expectations. But the reality is that for the most part, nothing's changed. Nothing's changed. All of those projects still very much in place. What are those projects? Well, the number one, most immediate one that is likely to cause, again, the next wave of buyers to come in. And the next wave of buyers are going to be most likely professional buyers. They're going to be driven by not news necessarily, going to be driven by, well, whoa, the Cybertruck production is going to ramp up. And as the Cybertruck production starts to ramp up, this is going to increase the profitability of the company, because whenever you're ramping up the production of anything, your costs rise, right? And you have no offset. In other words, there's no revenue coming in. to put up the Gigafactory in Austin costs, I mean, I forget what Elon said. I think, is it 3 billion, maybe $5 billion? That's what like these gigafactories cost. So, and then to scale it up, yeah, I mean, these are all very expensive. Meanwhile, you're only generating, I mean, it's 500 trucks a day, I believe, is what the current rate of production is. But that will rise as 2024 unfolds, as 2025 unfolds, and the market will look forward. So, this is like the process by which a professional investor would go look at it. And most professional investors probably, they're driven by much shorter term considerations. They got to compete on the calendar year performance game. What's the calendar year performance game? So I used to run a hedge fund. I used to manage money. And we were judged by what our performance is come December 31st of every year. Right. And if you have great performance, clients are happy and they're like, you did great. Here's another 50 million. Here's another 100 million. If you underperformed, you lost money. They were like, you suck. You were terrible. You lost my money, and they take your money away. So you got to play that game if you are in the professional money management business. You got to perform pretty much every year. And in some funds, etc., you've got to perform every quarter. I mean, there's 4 measurement periods: March 31st, June 30th, September 30, December 31st. December 31st is the big one. That's the one that your bonus is set by. That's one that your performance fees and compensation is set by. So, yeah, I mean, at 414, yeah, my guess is that, there probably were a lot of sellers there, and they would have been like, well, there's a lot of people here in this stock that are in it, for quick money, and we're out, and we're not going to come back in. But at current prices, in my opinion, in my judgment, remember, this live stream, not investment or financial advice. Whatever you choose to do with it is your responsibility. The Cybertruck with a backlog of, I mean, the numbers are somewhere between 1.5 and less than 2 million. I mean, this is for a truck that nobody has. Well, a few people now have. I think there's like maybe 5,000 there out in the wild. But even prior to them having produced it, had a backlog of 1 million trucks, right? And it is new, it is unusual, it is different, and it has remarkable technology that pretty much nobody else in the auto industry has, right? And that will make its way into every Tesla car. There's 3 things in particular that are there with the Cybertruck that is different. One is the fact that they've got this steering by wire. In other words, all of the controls are completely electronic. All right. So you've before there's mechanical elements to this, and this is a cost savings. It also facilitates potentially better reaction time for full self-driving. So this is a big deal. That is going to come into every car. And yeah, I mean, no other company, I mean, is even working on this. So I mean, soon everyone will be like, well, I'd like to have my car so that it has this drive-by-wire feature. I mean, not feature. I mean, this benefit. The second one is the electrical system. After 50 years of the auto industry saying like they were going to build this electrical system based on 48 volts, which makes a car's electrical systems far more efficient, reduces the amount of wire, reduces the complexity of all these things. It reduces the complexity of building it. Well, Tesla has finally done it, and they have put it into the Cybertruck. That will also make its way into every single one of their cars. And finally, they also have stamped the Cybertruck so that it's just the basic construction of the Cybertruck pretty much is where the construction is the structure. And that is also a revolutionary thing that the auto industry has been thinking about, considering for 30, 40 years, never chose to do this. So these are all massive advantages that right now everybody's like, well, the stock's low, so maybe I should sell it, forget it. I mean, it's not going to do anything. And this is the crazy thing about how, as individual investors, retail investors, we think about stocks, right? I mean, we generally want to buy them when they are high and rising, but when they are low, we want to sell them. But if you look at it from an asset perspective, it should more or less not quite be the opposite, because prices can, the price of a stock can go up, and it can be multiples of revenue. It can go from 3 times sales to 20 times sales. It can go from 7 times earnings to 50 times earnings. So you don't quite do the opposite. You definitely want to, if you can, the cheapest prices though are generally where your emotions, your feeling, your mood is to want to sell. Why? Because either like, well, you got in at a much higher price and it's making you unhappy. Or second, which is like, you're in it and maybe you didn't even buy in at the high, but you bought at some price that's in between. You're made a modest amount of money, or you've lost a modest money. But look at all of those other stocks that are going up so much more. So why not sell this? And you know what? I'll figure out when to come in. Yeah, I mean, oftentimes, like, stocks just start to go up, when someone decides, like, wow, this looks cheap. I'm going to start to accumulate shares, and they just start buying up the low cost inventory. And then suddenly, when the next buyer comes and flips the demand and supply balance to where they've got to bid prices up, suddenly, I don't know, price gets bid up 20% or 30%. And you're like, oh, well, I wanted to buy there where it was low, because that's where I sold it. So we get trapped into these psychological traps of generally wanting to sell low, and generally kind of like oftentimes buying into the things that have gone up the most, buying high. Now at ATG Digital Media, for the most part, we are sort of like medium-term speculators. Our time frames are 3 to 5 years for the most part. And so you're going to sit through periods in any stock where it may not go up, it may sit flat, but in the end, a stock performance is ultimately going to be driven by its business. A stock is an asset, not just purely a price. The price is something that drives our moods, our emotions, our feelings, our psychology, but it cannot determine the long-term price. In the short term, the demand and supply balance is going to reflect it. In other words, the price is set, and you really think about it, the price is set by whom? Well, the person who wants liquidity, right? I mean, if you are willing to accept a low price or whatever price, the person who's willing to sell at that moment, they set the price for everybody, so that's the price that is set. But that doesn't necessarily mean that that is either reflective of the company's value, of its business, whether it's cheap, expensive. It simply reflects always the person that wants to sell at this moment. In other words, if they need the cash, hey, we all know this. I mean, in real estate markets, there's always people willing to say like, hey, I will give you cash, except that their offer is for 50% less than if you had time and if you were willing to put your house in the market and let it sit and find a buyer that's willing to pay it. And it's a bit the same, in any market and in the stock market. So right now, we've got a lot of people that got in somewhere near, let's say, 350, 400, maybe some top ticked it. I mean, there's a reason why those spikes happen. It's because everybody's buying. It's no different than bottoms. Why do bottoms happen? Because everybody's selling. You don't get bottoms because everybody's buying. You get bottoms because people are rushing to sell. They're like, here, take my shares, take my shares, take my shares. I don't want them anymore. I'm tired. I bought them too high. Whatever the case is, I don't really care. Whatever it is, you want out, and you're willing to take any price you get out. And it's kind of similar at highs. And then after that, yeah, then there's a process where like this gets like digested out as sellers come, buyers come, and there's a back and a forth and a back and a forth. And then at some point in time, the sellers get washed out, sometimes quickly. Like I said, there's like, right? I mean, kind of like, during COVID, like what do you have? Like everyone wanted to sell all at the same time. You have that. And then after that, that recovery, which, has been like, enormous. you get that in return. And that's because all that cheap stock gets absorbed by folks who understand asset values, folks who understand market mechanics. And they're like, yeah, give me your cheap stock, give me your cheap stock. And, at some point in time, the demand supply balance will shift. And now, if there is a buyer that's like, well, I want in right now, it's the reverse of selling. They're like, I'm willing to pay, a marked up price of 20 or 30 or 40%. So, in my judgment, in my opinion, yeah, I mean, Bitcoin price, maybe people like, oh, it's gone up so much, I don't want to touch it. But Tesla's in the opposite space, right? I mean, this is a stock that's essentially languished. I mean, let me put that chart back up again. It's languished for, let's see, how long? Yeah, 1, 2, 3 years, 3 years. And if I go back and do this for, let's say, 10 years, let's do this for 10 years, you'll see there's a kind of parallel. Yeah, you see that, like all the way there, we sat. Well, I mean, the price was there, sitting there for a period of time. And if I extend this out a little bit more, let's say 20 years, which is the maximum that I can do, you can also see, yeah, after a period of time when it kind of like sits like that, then yeah, it kind of sits in this area here. Then you have a big rise. It sits, you have a big rise. We're here. We're still here. And that seems to be the pattern by which Tesla stock sort of like goes through these periods where people get incredibly optimistic, then impatient and frustrated, and then people get incredibly optimistic and they get patient, because some of the things that Tesla works on takes time. I mean, how long after the Cybertruck was announced did we get it? Well, it took 4 years. I mean, if I remember correctly, that happened, I believe, during COVID. I think it was 2020 when they did the presentation with that shattered glass thing. I mean, which was a great ad, by the way. I mean, it was like, everybody saw that and, it made them go look at the Cybertruck. It was 4 years later. So between coming up with the idea for something that's genuinely innovative, genuinely different, genuinely unique, well, it takes time. Well, obviously, they had to hammer down the design. Second, they had to figure out how to come up with production for it. And then, what are they going to change and fix all that? And now finally produce it and then deliver it. So the sales of the Cybertruck will start to hit the Tesla financial statements probably in a significant way starting the second half of 2024. And from then on, it will drive a cycle of interest among all kinds of investors. Why? Well, because people will start to bet on like, well, what are the deliveries going to be this quarter? And the deliveries, are they going to disappoint or are they going to surprise? And that will draw speculators in. And so those folks will start to take up the cheap stock. And now you'll start to see medium-term speculators, short-term speculators, long-term investors all coming in. And that's, when you will start to get the price starting to move up. Now, many folks say, well, Paul, I'll come back, in September and buy it. I'm like, hey, that's all fine. But if I'm right, Nick, I mean, there's almost no other company. And yes, I know there are many believers among you about AI, and thinking that, some of these chip companies have extraordinary potential, and that's fine. But for me, I'd rather take Tesla over those companies any day, because it's very clear. There's no ifs and whats. It's very clear what the opportunity set here. I mentioned Cybertruck. Full self-driving, which is truthfully, an even longer project than the Cybertruck. Tesla's been working on full self-driving. Well, I've had Tesla since 2017, and I've had their autopilot self-driving feature since then. I've watched this grow up, and it is hugely better, but it's still not at, I think like for them to say like this is pretty much done, it probably needs to be between 95 and 98%. I think it's at 90 to maybe about 95% on highways. On regional roads, I'd estimate 75 to maybe 80% on local roads. I'd say 65, 70%. So, and there's still enough situations in which the car either hesitates or doesn't know what it's doing, or it still needs more data to be able to figure out, like, hey, this is the right thing to do. But look, folks, you can be impatient, but who else is working on full self-driving? Google has essentially given up. General Motors has essentially given up. There's nobody else. There's nobody else that is working on full self-driving. And you can say, well, hey, Paul, self-driving is not worth anything. Well, yeah, that can be your viewpoint. But personally, for me, I can tell you that, in my opinion, fully self-driving cars, robo-taxis, they will revolutionize transportation. I mean, the idea that you can walk into your car and it will take you someplace, which today seems like science fiction, but Tesla is actively working on it. Now, we can argue about where they are relative to the final destination, but they are actively working on it. And they have been working on it for the better part of, almost a decade. So you can say, well, it's all useless. It's not worthwhile. But if they achieve, or I should say, when they achieve their goal, they will be the only company that has this. That makes them unique and makes it impossible for anybody else to replicate this capability. This is not priced into the stock. In other words, that scarcity of having pursued something incredibly difficult that took a long time to figure out, and to have actually achieved it. What's that worth? Well, today, if you go look at Tesla stock price, it's not really worth a lot. It's not priced in. It's absolutely not priced in, because it's sort of like having a monopoly, kind of like Apple and Microsoft together, because this will be the only operating system for a car that can drive you. I mean, like a robot can drive you using the most sophisticated forms of artificial intelligence that we have. So if you think that self-driving has value, then you would definitely think like, this stock is cheap. If I start to price in robo-taxis, and Kathy Wood of Arc Innovation has done various work. I mean, robo-taxis essentially deconstruct the value of per mile transportation. I think it goes from something like 35 or 40 cents to essentially 5 to 8 cents. So, I mean, extraordinary value can be created from this project. So we've got the Cybertruck, we've got full self-driving, and then there is the $25,000 car, Tesla Semi, Optimus Robot. I mean, Tesla Semi, they haven't yet even built a gigafactory to do it, because again, it will cost $5 to $7 billion. And as big as Tesla is, I mean, it's hard to work on like 6 different things. Their big initiatives right now are really the Cybertruck ramping up, full self-driving, getting that to something near completion. And then from there, it's really getting the technical improvements that are in Cybertruck into all of their cars, 48-volt system, drive-by-wire, the structural improvements, which make all of these cars safer, but they also make them cheaper, reduce the parts. All of the things I mentioned increase the profitability of Tesla. The final thing I want to say about Tesla is this, which is that most people who don't really look at asset prices, don't look at a company from a strategic point of view, think that there's something terrible going on because Tesla is cutting the price of its cars. I can tell you this is quite foolish. All right. I mean, Tesla, despite cutting the price of its cars by, I believe, almost 1/3, is still more profitable than any automaker on earth. They are more profitable, which is why they can afford to cut the price. And what is the purpose behind this? All right. The purpose behind this is to destroy the internal combustion engine makers, right? As they put out their EVs, or they put out their internal combustion engine gasoline engines, I mean, they can't cut price. I mean, it's not possible for them. If they cut price, they're losing money. So this is an enormous opportunity to absolutely take market share from the General Motors, the Fords, the Volkswagens, the Mercedes-Benz of the world. Yeah, before they even ever get started, they can't afford to cut price. They're losing money on their EV businesses. And they're in struggle mode. Meanwhile, Tesla can say, hey, yeah, I mean, the new EV buyer ultimately is going to be dictated by price. I know many people's like, well, Paul, I know many people would never buy a Tesla. That's all fine. Listen, if it's a choices between a $21,000 Model 3 and a $26,000, I don't know what the competing car is. Yeah, people are going to choose 21,000 over $26,000, especially at current interest rates. So this advantage is not priced in. In other words, they are taking market share. I mean, Tesla's market share is now up to, I believe, something near 6%. I mean, this is a company that was begun like barely 15 years ago, and it's up to 6% market share in the United States, the biggest car market in the world. All right. I mean, where will it be in 3 to 5 years? Well, I mean, between the price cuts, between additional products, between all the new features that I mentioned, drive-by-wire, better safety through structure, 48-volt system, full self-driving. Yeah, I mean, this is a crazy cheap stock relative to the future. So, yeah, I mean, if you're very focused on the short term, this is not for you. That's all fair. I mean, there's obviously, lots of things that go up and down very, very rapidly. But still, like I made a prediction, it was a few years ago, that Tesla will be the first like $10 trillion stock. I don't think that sounds like so much anymore because we now have like, I don't know, 5, 6, 7 stocks that are worth $1 trillion. But at the time there was, I think like Apple was approaching $1 trillion. And I was like, well, Tesla's got the greatest amount of growth, the greatest amount of innovation, the greatest amount of potential that's out there. And unlike when I first put Tesla into the portfolio at Profits Unlimited at Banyan Hill, they have no money struggles anymore. I mean, for them to ramp up the Model 3, they almost went bankrupt. I mean, remember when Elon said, funding, what was it? Funding guaranteed at 420, and Saudi Arabia was going to come and give him the money. I mean, they were desperate at that time. I mean, they were on the verge of potentially going bankrupt, not having enough money while needing to scale the Model 3 up. That's not the case anymore. They got plenty of cash. So this is an easier, safer, and arguably better bet at the current moment than it was back then. Back then there was risk, but obviously we got paid for that, which is that you take a risk on, and if it goes your way, yeah, you get a reward for it. Here, the risks are, at least financially, quite low because they got plenty of cash. The number of opportunities are extraordinary. The value of these opportunities is enormous. I mean, for them to take market share, to become one of the world market leaders, for them to have, I don't know, 20 or 30% market share in the United States, not priced in. For them to have a monopoly on full self-driving, not priced in. For them to have an econo car that costs, I don't know, I mean, they call it the $25,000 car, but maybe it'll be 15 or 20. Well, they're the only ones who can do it. Why? Because they get economies of scale. As they produce more, their costs go down. Nobody else has that. Bottom line, in my judgment, yeah, I mean, if you're looking for a cheap stock relative to the future, yeah, after 3-4 years of the stock languishing as a result of people obviously getting very hyped on the stock, people expecting things to move very fast. Yeah, it's taken more time, but still, like maybe, some of you I know are in a hurry, like, Paul, I don't have time. I need my stocks to perform now. The thing is that, I mean, when stocks are rising, nobody's selling them. So, I mean, what price they sit at in your portfolio is largely just like, hey, I like seeing my account rise, but until you cash out, I mean, that money isn't yours. I mean, it's not theirs. So, I mean, you can have giant gains, but, they have to be sustained for you to, go and, when you press that sell trade, for those prices have to be there for you. So for me, like I said, looking at the stock's struggles, people's emotions, feelings, and moods about it, to me, I mean, to me, Yeah, Tesla. This is a buy here. And generally, I showed you that chart pattern. After a period of time when they're working on their project, when growth is building up, at some point after that, when people have sort of like thrown in the towel, is when you get, yeah, that move up. All right, enough about Tesla. Enough about Tesla. Let me see some questions here. Uh, uh, We have one, let's see, that from Pulverizer says, a million reservations wouldn't make it to production on the Cybertruck. That's crazy, ugly, too vast. Well, everyone is not you, and you are not everybody, and I don't know who is the vast majority. If you have 1.6 million people that have put their names on a list and said, "Hey, I'm interested," even if you half it, that's 800,000. 1.6 million would be the production level of the Ford F-150. Other folks commenting on various different stocks, a number of people on Pure Storage. Yeah, we've sold out of all of those stocks, arguably too early, but it will time to be seen, like, what anybody that holds on will get for their stock. And, obviously, we don't manage your portfolio. It's up to you to decide whatever you want to do. More Pulverizer says, yeah, Tesla does have one of the 10 best-selling cars, yeah, which is the Model Y. So, yeah, and then various comments, which, he's always been, I assume it's a he, has been skeptical about Tesla and batteries. Edward says Tesla needs to give a discounted Powerwall to every buyer, build out the virtual plant. Yeah, I mean, I've got a couple of Powerwalls, and this is an amazing product. They just released the Powerwall 3, which actually increases the capacity of the battery by, I think, like 20%, and essentially would run like a medium-sized house for, I believe, 24 to 48 hours. So it's a pretty amazing product, but it's not at the mass level. It's clearly too expensive. All right. Before I get to the hour mark, let's talk about Bitcoin and crypto and what is going on there. All right. So this morning, Bitcoin's price finally hit an all-time high after sort of like teasing it for like several days and weeks. It was like 69,250 approximately, and the previous high was a little bit under 69,000. And immediately, if you go and look at the trading, it was hit by a flood of sell orders. And I put out this tweet. Let me see if I can get it up. Yeah, this one. This tweet saying, folks who bought near the high in 2021 are selling out their Bitcoin. This is very normal to see. People who bought high, held on through the crash, are happy, relieved to get their money back. But with the ETF, which was approved on January 10th of this year, sucking in at this point like 9,000-ish Bitcoin per day, when the production is 900 per day. Yeah, I mean, this supply is going to be gobbled up in a day, in a couple of days. And in my opinion, in my judgment, yeah, we'll just get taken in. So we might go through a day, might go through a week of selling. Plus, we've had a gigantic move, right? I mean, Bitcoin was at, I think it was like 28,000. I think, like, was it late last year or early this year? I can't remember. The size of the move is enormous. So some people are going to be like, you know what? I made my 100%. I'm out, and that's fine. And I'm on record as saying, like, hey, when you put together the things that, in my opinion, are driving this Bitcoin rally, I mean, there's three factors on sort of like, the qualitative side that's driving this, which I'll say is on the demand side. One is the fact that Bitcoin is now an established brand as the digital store of value, the universal global digital store of value, digital gold, if you will. And it's 15 years. And during that 15 years, it has gone from zero to where it is today, let's say about $65,000. no other asset, no other currency, no other investment, no other anything has anything like that kind of performance. So that has a credibility and an authority that people around the world have noticed, have understood, and now people are gonna be like, well, hey, this is something that I think I might want. Then you have the fact that during these 15 years, we have seen an extraordinary deterioration in the condition of most fiat currencies. What's a fiat currency? Essentially, a currency that's issued by a country with no other backing other than the geopolitical power of the country, their army, and then the taxation power of the country. That's what it's backed by. Now, in the United States, we obviously have a pretty powerful army. We have a very large economy, and that generates quite a lot in taxes. But we also have $34 trillion worth of debt. And our money supply starting about 2020 looks something like out of some crazy banana republic. I mean, the amount of money that was pushed into our economy was extraordinary. I don't have the numbers in front of me, and I've written a number of Substacks about this, but everyone knows these numbers. I mean, I think something like 40% of all the money that's been issued has come about in the last 3 or 4 years, which is just wild. I mean, wow. So the world uses US dollars in reserve to print their own currency. And they have all noticed all these things. They're like, what is going on? And they have been looking to be like, well, what do we do? And they are thinking like, well, yeah, I want to hedge the dollar. And what do you can do? Well, people used to go to gold, but increasingly a lot of people, high net worth individuals, rich people, sovereign wealth funds, family offices, hedge funds, they're like, to the extent that they were allowed to buy digital assets, they bought Bitcoin. And then the third reason is that we now have a Bitcoin ETF that essentially allows anybody to buy exposure to Bitcoin. It's not direct Bitcoin, but essentially you would get the benefit of a price increase. And we've got, what is here, let me see if I can get that up. Bitcoin ETFs. Share. Yeah, so let's go to that. Okay, you can see there's already nearly $50 billion that is now in the Bitcoin ETFs. There's 8 of them, including the original GBTC, which is kind of like what triggered the whole ETF thing. And there, as you can see, $7.5 billion has flown in since the launch. It would be a bigger number, except for the fact that people have been selling GBTC because their fees are very high relative to everybody else. But for a ETF that's been just launched since January 10th, this is a lot of money. In fact, the BlackRock ETF, and I'll just scroll down so you can see here. Yeah, on this right. Let's see if I can make this a little bit bigger. I can't, but it's in small print. But what you will see here is that the BlackRock ETF already has $10.5 billion. That started in January 10th. Fidelity's ETF has $6.7 billion. So there's a lot of money that is coming into Bitcoin through the ETF. And that is a level of access that has never existed in Bitcoin's history. I went through this in my previous YouTube video where I talked about the various halvings and what the state of the market was. Today, essentially, there is no barrier. Any company, any government, any individual with access to a US brokerage account can go and buy exposure to Bitcoin. That has not existed in Bitcoin's history. So what's the large potential? Well, when researching this, I found a number that said that the world's assets are about $610 trillion. So $610 trillion, if you took 10%, that would be yeah, 61 trillion, but that's obviously too big. People are not going to put 10% into Bitcoin, not at first anyway. You take half, it's 30 and a half. You take half of that. Whatever number you come to, it's an extraordinary amount of money. If you take 1% of 610 trillion, you still get like 6 trillion that needs to go in. And this is a highly finite asset. There's 21 million that can ever be mined, produced, created. 19.6, I believe, have already been mined. So there's very few left. Something like between 2 and 3 million have been lost. Also, at the current time, it's estimated that 70 to 75% of all the Bitcoin produced and not lost, but actually held, is now being hodled. In other words, people are just like, hey, I'm going to hold on to this like it's absolute treasure. So as money comes in, where will the Bitcoin come from? I mean, you're going to see, market 101, economics 101 happen, which is that massive demand meets limited supply, price goes up. I mean, that's not like some genius. That's just like basics of market, 101, economics 101. And then on top of that, come April of 2024, it's estimated now that the halving, which happens every 4 years approximately, but it's actually driven by computing blocks. We're going to see the daily new supply of Bitcoin half from 900 a day to 450 a day. So in other words, the supply into rising demand is set to shrink even further. So yeah, I mean, again, it's economics 101, markets 101. Yeah, rising demand, supply, going this way, yeah, price will go up. So whatever is going to happen short term with Bitcoin, yeah, it is what it is. I'll say, I don't think it's like like an enormous leap to say like, hey, I think Bitcoin could be at $1 million in this halving cycle. I mean, I did my YouTube video. I actually updated some of the numbers in there because I found better sources. Some of the numbers weren't like, there's the early Bitcoin numbers are very hard to find, but still the basic contention that I laid out in that YouTube video, which I believe I did on Friday, so go check that out, which is that you've got sort of like almost like the initial demand, almost Genesis like demand from like the halving of 2012 when, yeah, post the halving, the gains were like almost 10,000%. Now, I don't think we're going to get 10,000%, but it's not out of the question for us to see potentially 2,000%, which, we had something near that in both the 2016 and 2016 halving. Because we have extraordinary demand similar to what we had in 2012 and 2016 because of this Bitcoin ETF. So that's obviously for Bitcoin, but Bitcoin, money pushing into Bitcoin does a couple of things. One is that it, like a lot of the money that's pushing into Bitcoin, will never exit Bitcoin. Remember, like a lot of people, including me, and certainly in the portfolio, the silver tier model portfolio at ATG Digital, we have just hodled Bitcoin. I mean, we bought it originally at Banyan Hill in January of 2020, and we have just hodled it. All right, now hold on for dear life. This is a crypto term that's used. And yeah, I think the original purchase price there was 10,000, but there would have been many opportunities during 2020 because there was the COVID crash 3,000 to buy at lower prices. So I'm imagining that people who followed that probably have a slightly lower price than that. But if you start at 10,000, we're at 65,000. So, big money has been made. But if I'm right, the bigger money really, is here to be made. And that has a twofold effect. It has a way of like pushing more money into crypto because money flows into Bitcoin and then people sell their Bitcoin, they buy other stuff, everything from decentralized finance tokens to obviously meme coins that are, some of them have gone crazy, but there is like a shift going on from sort of like fiat finance into crypto finance. And Bitcoin ETF, kind of like, a lot of that money will never leave. And remember, the ETFs, they actually have to go buy actual Bitcoin. They can't do synthetic Bitcoin. They can't do pretend Bitcoin. They have to actually show real, actual Bitcoin bought. So if it's sitting there, well, yeah, it's sucking money that is never, most of it will never go back the other way. will just sit there and it will be hodled as Bitcoin price keeps going up. Not all of it, but the vast majority of it. So there's a lot going on with Bitcoin and crypto that, in my opinion, people in hindsight be like, that was so obvious. It was so clear that there was this enormous transition going on between the old world of finance driven by banks and all those things, and then this new world of finance that is driven by crypto and fintech. And Bitcoin sits at the apex of it. I mean, that's really the point at which people enter crypto and from which money trickles down into everything else. So I am incredibly bullish on Bitcoin in the short term. At some point, based on my model, it looks like the peaks come about a year and a half after the halving. So there'll be another peak and there will be another bottom, but nonetheless, the overall mechanics of something that is incredibly finite, that is desired around the world, for which there's, to the extent that the world's governments keep producing money that has no backing and keep borrowing more money and pushing more money into the economy issuance. Well, it's in the end, it's a very simple bet. A lot of that trying to capture permanent value is simply going to go into Bitcoin and stay there. It's going to go into Bitcoin and stay there. So, all right, I have gone on for a bit. Let me see what other questions have come through on everything. Let's see. Peter says, I've seen Cybertrucks driving around in San Diego. Yeah, if you're in Austin, I have a friend in Austin. He says, you can see a lot of Cybertrucks. I'm on the list to get one. I was hoping in the next 30 days, but maybe it's over the next 3 months. I will definitely do a YouTube once I get it. The Nature says, what do you think about EVgo and Canoe? EVgo is in our Diamond tier portfolio, which is our model portfolio that focuses on small and micro cap stocks. Canoe, I don't really know, and I don't have an opinion on. John Lessman, who's been a subscriber for a long time. Hey, John. STEM, a buy or hold. STEM is a stock that, in my opinion, they still have a valuable piece of software that integrates distributed energy resources, solar power, wind power, battery power. But that sector is not in favor. People, remember, our moods drive our buys. And so, there are sectors that are in favor, and that's what gets the money. And there was a period of time when, that sector was very much in favor. Stocks like Enphase and Solar Edge and STEM and others were all being bid up. Right now, this is not an area that's being bought. So it depends on your time frame. I think I just did my silver tier model portfolio update this morning. I think relative to the price we put it in silver tier, it's down 90%. At this point, it probably should go into diamond tier, which would be small cap. But the basic capabilities their Athena software, from what I understand, is still the best software out there to integrate, coordinate all of these distributed energy resources. But like I said, you need people to be in the mood to come and buy alternative energy, new energy stocks for the price to go up. But the basic business potential is there. So that's not an answer or a non-answer, but that's what I would tell you. Various comments from Pulverizer, who is our most enthusiastic contributor. He agrees with the Banana Republic sentiment, and then talks about what Canada did with truckers, and various things about the amount of money that has been sitting in the amount of money that's been issued by governments. One of the other things that I want to point out, I just want to get back to this, is something unusual that is going on with the stock market, which is that in the past, when I think when media was a little bit different, when everyone got all of their financial news from CNBC and from where else? Where financial news come? I suppose the Wall Street Journal and the New York Times. The market indices would never really look like this. right? I mean, so what's unusual here? Well, what's unusual here is that you can see the Dow, S&P 500, and NASDAQ composite are down. Meanwhile, the small cap and mid cap indices, while they're not up immensely, they're up. Now, generally in the old way of seeing the world, essentially small caps and mid caps would get sold the moment these bigger indices. Yeah, and anytime there's I mean, for the Nasdaq to be down 1.74% and for small caps to be up at all, like, yeah, that's very, very unusual, and that points to a shift that has unfolded over the last 3 to 4 years. It really began with that like sort of like meme stock COVID market, which showed you the power of new investors, retail investors, and also the power of social media. Because that is where a lot of now news dissemination activity is coming from. Folks on Reddit, on Wall Street Bats, and any number of those like subreddits that are out there. That's where the discussions are going on. That's where people are arguing about stuff. That's where people are being persuaded to go into the stock or the other. There's YouTube, people like me, obviously, on YouTube, and X, previously Twitter. These are where now the news is coming from. And what it's led to is like slightly less of this idea that, well, if the indices are down, I'm going to sell everything. There's still plenty of people that follow that, but it's also very clear if you look at stocks today. Let me shift to this tab. And you can see the small caps are down now a little bit. But there are still stocks that are being bid up that oftentimes, like, yeah, you'd not see moves of this size when you have markets that look like this. And in my judgment, that's because of a sort of like a structural shift that has occurred between how we get our news about our stocks, or now crypto, which is now social media is really where this news gets generated and transmitted. And oftentimes, I'll call legacy media is just really reporting on what's being said in social media, particularly on X and on Reddit. So that's a big shift. In other words, the media consumption habits of sort of like the newer investors are driving markets to a great extent. And that's leading to like less homogeneity, if you will. Well, I don't know what the right word is. Yeah, that might be the right word in terms of like how things should happen. And so I have been saying this, and I said in some of my updates, which is that expect surprising things to happen. In other words, if you have a playbook in your mind, which is that the markets crash in this way and it takes all stocks, I think we're in for some surprises as 2024 unfolds and the future unfolds, which is that it's going to be more like, I mean, like, I guess the best analogy I can say is that if you look at the music business, I mean, there was a time when everybody would know what the number one song in the country was because you heard it obviously on your radio, you heard it at the supermarket, you would hear it at the baseball stadium, you would hear it everywhere. And so that meant that, everybody knew it. And that's kind of like what the Dow, the S&P 500, and the NASDAQ were. They were the hit song. But it seems to be that there's fewer people that are paying attention to that. Instead, they're focused on how they're getting their information, whether it be through Reddit or X or YouTube or some other social media channel. And they're just focused on the stock. And they're like, well, the stock market, the S&P 500 or the Dow or the NASDAQ can be doing this, that, and the other, but I'm still focused on this stock. And if I want to buy it, I'm going to keep buying it. And I've got a group and a community of people that are going to continue to buy. So we can see odd things and changes happening in the market that are very, very significant that, are going to make like the playbook that is used by some number of institutional investors kind of obsolete. And certainly, we're seeing some signs of that in certain names where these stocks are just suddenly up and you're like, well, what is going on? What is going on? So that's the last thing I want to leave you with. We got up to 82 and I think 90 people for this live stream. I want to thank you all for showing up. Subscribe to the channel so you get a notification. And thanks for all of your questions. I hope that I was able to answer them. Bill wants to, before I go, the EOS, which was a battery company, sadly, that we've sold most of those companies off because, like I said, there was enormous investor enthusiasm for all of new energy in that time. But this is a company that needed to scale faster. They were going to, in my judgment, look like they're going to run out of money. So we have sold out of all of these. And I'm getting an update on Tesla that's 161. Like, hey, again, short term, remember, our emotions, our feelings, our moods, they go with price. But the long-term returns are driven by the opportunity set that is in the company as an asset. So everyone will have to, just see like, hey, what's right for you, and do the right thing. Oh, Kendall says she was just kidding. Okay, got it. All right, everyone. Thanks for showing up. I'll do another one of these next week, unless I come up with a special topic, which I don't have right now, which means I would do them on Friday. But hey, sometimes I come up with them sort of like, early in the morning. It's like, oh, I got to tell folks about this. So subscribe so you get a notification. Bye, everyone. See you soon.